Folks, we are in the worst stock market since 2008, but what I'm going to show you in today's video is going to be startling. This is pretty much one of the worst stock markets we've ever been in history. And I'm going to share with you kind of what I think is the right thing. Do I think it's just kind of calling it a day and staying cash, buying, selling, all those sorts of things. We'll discuss it all. You know, the market's rough when I start wearing a backwards hat. Okay, it's gotten serious. Like we're at that moment in time. It's serious now. Okay, we're in this, and it is awful. Okay. It no longer can we say, oh, this market's a little rough or da. No, this is awful. Okay. And what I'm going to show you in today's video is going to explain to you how awful it is. And I feel like the media hasn't picked up this enough, in my personal opinion. Like they haven't shown how awful it really is. And I am going to show everybody how awful it really is. Okay. Now, I thought we'd just start here with Amazon. Obviously, the stock's gotten devastated today, down around 15% or so. The stock is back to the level it was in June of 2020, which is extraordinary. And, with an Amazon, who knows where the bottom is for this baby, right? The valuation's gotten much, much cheaper, but here's the thing. Amazon just said next quarter they might grow revenue like 5%. So if this is a company that usually grows 15 and 20%, now all of a sudden they grow 5%, investors are not going to be willing to pay nearly as much for Amazon. Okay. And so, now myself personally, when it comes to Amazon, I've never been able to really build a big position in Amazon. I feel like, for the next 6 months or so, this is going to be my chance to build a big position in Amazon. And I wouldn't be surprised if today's not even the bottom. I wouldn't be surprised at all if this baby keeps falling, especially if the stock market stays in a rough place. There's just no way that one can do well in that sort of market, right? The Russell is back to where it was in November of 2020 now. The Russell just hit a new, multi-year low. A new multi-year low on the Russell. Russell, for those that don't know, is basically small cap stocks, okay? You want to see something even more insane? The NASDAQ. The NASDAQ is now also back to levels it hasn't been since November 2020. And this is extraordinary. And the reason this is so extraordinary when it comes to NASDAQ is you think about all the companies that were helped in Rona, right? And it was all big tech. These companies saw their businesses boom. Amazon, Apple, Google, with everybody spending so much time online because they were forced to be home, Facebook, Microsoft, you go through these companies, these are the ones that drive the NASDAQ at the end of the day. And these companies all saw a huge benefit to their businesses. The chip shortage helped it did end up helping companies like NVIDIA and some other companies and AMD and some of the others. And, with all that help that those companies got, right? And all that stimulus money that ended up probably going into those companies' pockets. Even with all that, here we are at this moment in time in which the NASDAQ's going back to levels it was prior to all that, right? That's just crazy to think about, how much devastation there's really been in the market in such a quick amount of time. The S&P 500 now is we're starting to lose the S&P, which is the next level down. The Dow and the S&P are kind of the last level, the last major indexes to lose. We already lost the NASDAQ. We already lost the Russell. The Russell was the first to lose, then the NASDAQ. The next up to lose in this market is S&P 500, and the last thing to lose will be the Dow 30. But essentially, the S&P 500, now we're back to levels of April 2021. So basically, we're at the lowest we've been at any point in the past year. Look at NVIDIA. This is a 1 month chart of NVIDIA. And I've been trying to tell folks, when you're in this sort of market, it's very important to understand this. When you're in this sort of market, the last stocks that fall are the ones that had been holding up really well, right? And had been doing really well, and everybody's like, man, these stocks are doing great, right? And so I've been telling people for a little bit now, the biggest risks to the market are no longer the small caps and the mid caps and the more dangerous tech plays. It's companies like NVIDIA, companies like Apple, companies like Tesla, companies like those, AMD, some others that had been holding up decent until very recently. And now these stocks are even starting to fall apart to pieces. And like NVIDIA is a perfect example. They didn't even come out with earnings or anything. It's not like they came out with earnings in the past month. And this stock is down 34%. And also the market's not even down remotely close to 34% in the past 1 month. But here NVIDIA is just, the stock just continues to get devastated. And the reason being is I think everybody on Wall Street knows, NVIDIA's results are going to get worse and worse over the next few quarters, essentially. They'll probably report a good last quarter, but the stock market's looking to the future. And they feel a weakening business, and they're probably going to be right in that. AMD, And the stock's down 29% now in the past 1 month, okay? And so when it comes to AMD, NVIDIA stocks like that, it doesn't really matter what the report for this upcoming quarter. Everybody's thinking about the future, the next several quarters, and it's going to be likely a story that gets worse and worse for stocks like that, okay? We're starting to lose PayPal, we already lost PayPal. I don't even know why that one came to my mind. Apple, we're starting to lose this baby, right? Now in the past 1 month, the stock's down over 10%. And this is after, think about this for a moment, okay? This is crazy. Apple just reported a quarter that was near perfection. They killed it, man. They killed it. And this stock can't do a thing. It can't do a thing. It's not helped out at all. Down 10%. Now, on the conference call, very, very interesting. Tim Cook basically said that the supply chains are going to mess up their numbers and could hurt their business by several $1 billion, things like that, okay? So people are looking at that and they're like, how accurate is this? Or is it a situation where maybe Apple doesn't have the demand, but they can, for this upcoming quarter, but they can put it on supply chain, like, oh, we're being held back by supply chain. No one really knows at the end of the day, right? And it's hard things to prove. And so that's a thought process that I think is going through Wall Street's head. And they're like, you're saying supply chain is going to mess up your numbers next quarter. Maybe it's demand that's going to mess up your numbers next quarter. And we'll see. I mean, here's the thing. Almost every single business we're seeing is being hit negatively. Amazon comes out and says they might do 5% revenue growth next quarter. Come on, man. Eventually that catches up to Apple as well. And it catches up to everybody, right? And so I think Wall Street's trying to read through this and be like, I don't know about this. And that's why even Apple's starting to falter here. And if they come in with a troubling quarter next quarter, it's not a pretty situation. And we'll lose that baby as well. And look at Netflix. This stock can't find a bottom. It can't find a bottom. It's a new, multi-year low. I mean, this is the lowest Netflix stock has been since probably 2017 now at this point in time. For Netflix, in my opinion, value investors will start stepping in at 175 to 180. I think that's where they'll start stepping in. It might even be a little bit now that it's under 200 starting to step in this stock. But I think 175 to 180, if it hits down at those ranges, I think that's where a lot of value investors start to step in this stock. Growth investors really want no piece of Netflix right now. I think a lot of value would love to hold this one, but it's just got to get a little bit lower, okay? Home Depot. I think Home Depot is an important stock to track. If you want to know how Wall Street feels about the future of the U.S. economy, look no further than Home Depot. Home Depot is the perfect play for the U.S. economy, right? It's U.S.-centric, and at the end of the day, if the U.S. economy is doing good, Home Depot is doing good. If you pull up a 1 year on Home Depot, the stock is down 7%. No one wants to own Home Depot stock right now. And this is very, very telling. This basically shows you that Wall Street says the U.S. economy is going to get into trouble, okay? Now, they might be right. They might be wrong. Everybody's got a different opinion on that. But I can tell you, if Wall Street doesn't want to own Home Depot, they're basically saying the U.S. economy is going to get into some trouble because it's very, very simple. U.S. economy does great. Home Depot is going to do great. U.S. economy starts to falter and starts to fall to pieces. Home Depot also, as far as the stock price at least, will start to falter and will start to fall to pieces, okay? And so that's basically just, Wall Street saying, we don't really believe in this economy story. And look at the stock like Home Depot. Whew, I mean, it's in a tough place, okay? This is the NASDAQ this month. We're down over 13% on the NASDAQ. This is one of the worst months in the history of the NASDAQ. That's the most incredible thing. Like this isn't just like, this is kind of a rough market we're going through. This is a devastating market. When you start talking about this is one of the worst months in the history of the NASDAQ, and you're going to see how bad it is in just a moment here, nothing short of extraordinary. This is year to date for the NASDAQ. 21.5% the NASDAQ is down. Year to date? That's ridiculous. We're 4 months into the year. Like I said, I've been doing this since, 08, 09, and I never remember a year starting out 21.5%. And we'll see in just a moment that even in the worst years, we don't start out this bad. This is a historically insane, goes down in the record books. Bad start to the year. And so a shot for everybody that's watching this video right now that has been in this market, here's a shot for you, okay? You deserve it because this is historically one of the worst markets we've ever seen in the history of the stock market, okay? Look at this. This is a tech bubble in 2000 and the start to the year for that year, okay? So January through April, we were down about 14%. Think about this for a moment. The tech bubble popping was not even as bad as the start to this year, right? Where we're down 21, almost 22%. In the tech bubble, they were down in the same amount of time, 13.6%. That's, when you say that's worse than the tech bubble start to the year, that's crazy to think about, okay? The only way we could make it look worse is if we back it up, or if we go a little more forward and go from like, February peak through there, we were down about 27%. So we have to kind of like, not give it a realistic look. But even in the January through April timeframe, still, you weren't down as much in 2000 when the tech bubble was blowing up. It still wasn't equivalent to how bad this market is. It's actually far worse, okay? Now, if we go back to 2008, the start to 2008, and remember, this was in the Great Recession. 2008, we were actually up 1% to start this year in the same amount of time. Think about that for a moment. We're down almost 22% to start this year. In 2008, they weren't down that much. It was actually, the market was up 1% for the NASDAQ. That's crazy. Crazy to think about that, right? What about 2009? That was a disaster start, right? No, the start to 2009, we were up 16%. So in 2008, 2007 also, by the way, I didn't pull that one up, but I did look at it. 2007, 2008, 2009, all those years were exponentially better than the start of this year. That's how historically, insanely of a bad year we are going through right now. Okay, guys? Like I said, I'm shocked to everybody that's going through this market, because when you start having to, when I pull up stuff like this and I show you that we're in a worse market than 2000, we're in a worse market than 07, 08, 09, that's when you know it's awful. You are going through an awful market, okay? And it's not that it's worse, it's dramatically worse. That's the craziest part of this. It's not like it's like, oh, we're just a little worse. We're dramatically worse in those years. Crazy how bad this market is, okay? I even pulled up 2020, okay? 2020, I even pulled up this baby. And, this is in the Rona crash. Think about this for a moment. All of a sudden, out of nowhere, once in 100-year pandemic comes out of nowhere. And all of a sudden, it's like, oh, we're going to close the economy. And everybody's like, oh my gosh, are all these stocks going to go to zero? Things like that. We were down like 3% from basically the start of 2020 through this same amount of time. That's insane, man. Insane. Now, let me give my opinion for a moment on this market. So, and kind of my perspective on this from a couple different angles here, because this is the worst stock market start to the year that I've ever seen. Okay. It's just absolutely devastatingly bad. And I don't know, you might have to, I don't even know if I should have pulled up 1929. I don't even know if 1929 we started out this bad. I don't even know if you go back to the Great Depression, we had a stock market this bad. Obviously the NASDAQ wasn't around back then. And a lot of this I was comparing to the NASDAQ, but that's just crazy. Okay. So, first off here, in kind of my opinion, as tough as it is, so I'll give you a good example, okay? My brother used to always say, hey, basically in football, you have to go over the middle sometimes and catch a pass, and you get absolutely whammed by the safety, okay? The safety comes out of nowhere and just absolutely slams you. And anybody that's ever played football, you know that feeling. It's devastatingly bad when you got to go over the middle and a linebacker or a safety just smacks you. It hurts, okay? And I don't think they can quite hit the way they used to back in the day, but it's devastating, right? But my brother used to say, Jeremy, you're going to get hit no matter what. You might as well catch the ball and be the hero, right? And I got to say, damn, that man had a point, okay? My older brother, he had a point. If you're going to get hit anyways, you might as well catch the ball. And so the way I look at it, in this sort of market, you've got to buy. And it hurts, and it hurts. But no matter what, it's going to hurt. If you're in this market already, you're already getting slammed anyway. So it's kind of like going over the middle. It's either you can drop the pass and you're still going to get the pain, or you can catch the pass and be the hero. So when I look at a market like this, I see countless companies that I can increase my ownership position in, right? And build my ownership position much bigger. This year, we're getting a historically bad year, like historic. Like this is going down the record books as the worst or one of the worst starts to the stock market year ever in the NASDAQ, right? So in that sort of year, there's so many companies out there I can increase my ownership position in that I'm not going to get these sorts of opportunities in future years. It's not the way it works. Okay. You get these very rare opportunities where you can add ownership of companies that you love for the next 5-10 years at extremely discounted rates. And to get another year like this, we might have to wait 20 years, 30 years from now. You know what I mean? Like you never know. Like you might have to wait 50 years. You might never have another year this bad to a start to a year in your lifetime. It's possible. Maybe next year starts out this bad as well. But you got to understand, when you start trying to do things that have historically never been done before, and you're trying to say, oh, maybe we can have another year like this next year, dude, very few and far between. To ever get this sort of devastation where countless stocks are at multi-year lows, 52-week lows, all-time lows, this doesn't just happen. I just pulled it up for you. Not even in 08, not even 09, not even in 2007, not even in 2000. Those ones couldn't hold a candle to the situation we're going through right now. So when you get those sorts of years and those sorts of opportunities, you got to catch the ball. You're going to get hit anyway, so you might as well catch the ball and be the dang hero. Or drop the ball, you still get hit, and then you're just going to end up feeling insult on injury. It's like, dang, I suck and I got hit. It feels bad all around, right? And so as tough as it is, you got to be a buyer in a year like this. And as devastating as it is, and it sucks, and I know it sucks to feel like I buy a stock and it goes down more, and then I bought more of the stock and it went down more, and it's like, when does it stop going down, right? And you just got to buy into those dips essentially, okay? Now, let's speak about margin for a minute, because I know a lot of folks are looking at margin right now and they're considering it, right? With all these stocks being devastated. So you got to be very careful. If you're thinking about margin, I would disregard it for almost everybody watching this, but if you're thinking about it, you better be super careful, because here's the situation, okay? I understand there's a lot of great deals in this market right now, but it doesn't mean it can't get worse, right? Remember, in the 07 through 09 crash, we didn't bottom until the indexes were down over 50%. All of them, 50%, okay? So remember, the S&P 500 and the Dow still isn't in technically bear market yet. The NASDAQ and the Russell are. They're in bear market, and they're in a pretty good amount of bear market. But if we're going to go through, hypothetically, an 07 through 09 type crash, you got to understand there's more devastation to happen, a lot more devastation. And so, if you start going on margin and this market goes a lot worse and the economy goes a lot worse, and imagine we've even had headlines about unemployment climbing or anything like that. Imagine all of a sudden unemployment starts climbing, companies start cutting jobs. We already seen it with Robinhood. We just heard about Wells Fargo cut a bunch of mortgage bank jobs. Imagine real estate starts to slow massively in the back half of this year, 2022, and imagine some construction jobs start being lost. Like, these are all potentials that we haven't even seen those sorts of headlines yet. That would just be another devastating kind of lever to the stock market, right? Let's hope that doesn't happen, because that'd be awful. Like, we don't want to see anybody lose their jobs and stuff like that, because then you need to try to get another job. If you can't get another job somewhere, all of a sudden, next thing you know, you're out of work and you're on food stamps and unemployment and things like that, right? And that's just devastatingly bad. So let's hope that situation doesn't happen. But what if it does? You could easily end up in a market where the NASDAQ goes down 30%, 35%, 40%, 45%, or dare I say, in 07 through 09 crash, like 50% plus. And so this is why you have to be, you shouldn't even really consider margin, but if you do, you better be super careful, man. You better be super careful, because I'm just telling you, as somebody that went through margin calls before, it sucks. I went through that in 2015. I've been there. And it's no fun. I've been through a lot of things in my life. I've been on food stamps. I've been, in a bad economic situation. I was a minimum wage worker. I was a dish cleaner at one point in my life. And I did go through margin calls in 2015. And that sucks when your brokerage says, hey, you got to deposit another $10,000 in your account. You're like, dude, I don't have $10,000. And then you're selling stocks at prices that you never even I can't believe I got to sell this stock at this price. Like, imagine you're buying Amazon at 2,400, you're going on margin, and Amazon falls to 1,800. Next thing you know, you got margin calls, and you got to sell your Amazon at $1,800 a share. And it's like, seriously? Like, Amazon's going to be $5,000 plus in a few years from now, but I got to sell it at 1,800 because I'm getting margin called up the you-know-what? That's what happens. And so I just caution everybody, if you're going to do margin, don't even consider it. One, if you're still, can't talk you out of it, be very careful. And I mean very careful, okay? Hope you guys enjoyed this. As always, make sure you sign up for a Hungry Bolt newsletter. There'll be a pinned comment down there. We try to keep you up to date with everything going on in the market, business news, things like that. Much love, and have a great day.